What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 6th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to dive into the question that is on the minds of so many people within the cryptocurrency space now, and it's a question of whether or not the hype around non-fungible tokens, or NFTs, is just getting started, that we have yet to see peak euphoria in the market, and we're going to see prices climb even further, or is the cycle in this case? Is the boom around NFTs starting to wear out? I want to go ahead and provide a very neutral thesis on this. As many of you guys know, I don't have exposure to NFTs just yet, but I want to talk about my rationale for why I haven't gotten myself exposed just yet. We'll dive into this as we go through the conversation. So, for those again who don't know, NFTs in this case, or non-fungible tokens, are digital collectibles that live on layer 1 blockchains or layer 2 solutions. It could be things like Ethereum, it could be layer 2s like Polygon, it could be other layer 1s like Solana, where you create a one-of-a-kind token that's a digital collectible that only one person should own in this case, right? Or maybe, for example, you have a certain number of these digital collectibles that match some piece of artwork, in-game items, you name it. Some of the popular applications that have taken the space by storm are plays like Axie Infinity, CryptoPunks, you name it. There's a ton of them out there. Now, as much as this phenomena at first, even as far back as 2017, kind of came across to me as a bit of a pure speculative play, speculation is a core part of finance, and people love to hold things that they do value. So as time has progressed, I've become a little more comfortable with the idea of NFTs. But I want to go ahead and talk about some of the important things that you should know about for full transparency's sake, and outside of that as well, talk about my vision for investing into NFTs. So first off, let's go ahead and talk about the current state of the market. If you look at any of the major market metrics that are out there today, you can look at nonfungible.com, and it's going to give you a great amount of metrics to work with for total amount of NFTs sold, the total amount of NFT wallet addresses that are participating in NFT transactions. There's all types of metrics that are out there because it's all settled on chain. And this gives us a great insight to what's happening in the market. Now, what we're working with here in the sense of the metrics is obviously in the long term here over the past couple of months, a generally growing trend. We have generally higher levels or higher parabolic points, and we're setting generally higher bases. Whereas back here, the base range for NFT sales back during the first wave of the bull market was anywhere from around $2 to $6 million. We are now setting bases in double-digit million-dollar territory. So the NFT space is definitely growing to some degree. However, and I don't want to cause any panic here because I think the data here isn't to its full extent. The last metric point we had here was on September 1st, and I don't even know if this is the correct number. But I do want to showcase to you guys the general trend here, whether you're looking at the daily, whether you're looking at the weekly, or the monthly time frame for completed sales here. And these are where they're taking averages over certain periods of time, right? On the daily, this is the pure daily statistics, but also the 7-day average here and the monthly average. You can see that the trend here is starting to potentially top out, going from a peak 7-day average of $1 billion in NFT transactions. It's completely swept across the crypto space, to be fair in this case, right? But now we've started to see these sales start to decline. Well, let's go ahead and take a look at some of the other metrics here. Let's go ahead and take a look at the unique wallets participating on a weekly basis and a daily basis. We can see here on the weekly, right? Starting to curve over on the trend. Daily, right? Starting to, again, hesitate here. And I don't want to focus, again, on this dramatic decline. I'm going to be completely candid in saying that the data here might be a little bit skewed, or they might need to modify the information. But we can see here that, generally speaking, we're starting to set in slightly lower highs and lower lows. Again, a stagnation of the trend here, whereas we were setting higher lows and higher highs, just like you do in TA. You also want to see this as well when it comes to the data. So the trend here is starting to slow, and as we take a look at the monthly as well, right, we can see though that long term, and this helps us to kind of step back in the long-term vision, that NFTs generally are making nicer upswings, setting higher bases, and having more and more participants, right? So we've gone from single-digit thousands to double-digit thousands to hundreds of thousands of participants. NFTs have definitely started to grow. And again, I think where a lot of the naysayers in this case were very confident for the past couple years since CryptoKitties back in the speculative period of 2017, NFTs have come a long way and they've garnered a lot more attention comparative to where they did before. But I want to go ahead and talk about a couple things you should be aware of and also share a little bit about my thesis for NFTs. So first off, the important thing is I'm going to go through a little bit of a ramble session here. The first thing to understand about NFTs is that as of right now, for the cost of NFTs, it is not an accessible market for everyday people. Now, I understand that some people would say this is not really per se negative. Maybe you and I, in this case, can't buy an entire NFT, and there are solutions like fractional NFTs that are starting to be made. But let's go ahead and just think about this in a pure sense of widespread adoption, to the degree of something like DeFi. And the same argument can be made against DeFi in this case, in the sense of layer one, which is that it's just generally too expensive to continue this trend going forward. As the gas prices have remained relatively heightened, this is what generally leads to these general cycle tops, or at least these shortened periods of time where NFT crazes start to go down, because the gas fees start outweighing any potential ETH that someone might have to invest in an NFT. So I think that that's a major stagnation point that people have to keep in mind. But I'm going to go ahead and talk about the real dark side of NFTs that I think a lot of people won't tell you guys about. And to be fair, it's an issue in traditional cryptocurrencies as well, but usually in speculative altcoins that aren't listed on major exchanges with real volume and real price discovery. And that is wash trading. I'm going to be very candid with you guys because there's a lot of people who won't want to talk about this, which is that there is a lot of fake hype sometimes in NFTs. And all you simply need is, in this case, the creation of an NFT, and ETH coming from an external wallet address that the owner of that NFT owns, or a secondary party, a market maker in this case. And basically, if I can bid, in this case, $1 million on my NFT, and oh, that adds the numbers of sales in this case, and it makes it real to a degree, right? Someone's willing to pay $1 million for my art creation, right? So these are the kind of things that we have to worry about here in a permissionless environment, right? And there are a lot of participants in this case promoting NFTs, promoting new sales in this case, or launches of NFTs, and they're not talking about this reality. Whereas in altcoin markets, it can happen. You can have people making fake volume, people owning the buying and selling account and creating fake market volume, right? It happens, but it generally doesn't happen in areas like Uniswap or exchanges where you have a real fee cost basis per what you can get out of it, right? So these are some things to think about here when it comes to NFTs. But I don't want to discount that there aren't real people buying NFTs. There are. There are people paying this, and whether it's because they're just simply being convinced to do so or they really like the assets that they're buying, there's real market demand for this. And I think this takes us to step back a little bit into the topic of the metaverse and NFTs long term, like the big picture here, guys. Like, I think, trying to buy one NFT in this case, I got to be candid with you guys. A lot of people so far are in an environment where they're buying an NFT, hoping to sell it at a higher price. And in reality, a lot of people get, left holding empty bags. That's the current situation for most in the NFT space, right? Especially if you're the buyer in this case, rather than the creator, walking away with a nice, pretty profit from the beginning with little to no risk. You only pay the gas cost. Right? So this is an important set of things to keep in mind. But again, taking that step back, what's the long-term vision? Is there room for NFTs and digital collectibles? Well, I did a really interesting piece on this in the Dash report this month. And if you guys wanted to read into it, you guys can sign up down below. It's a really solid piece that dives into the kind of long-term history that set the stage for NFTs. But I'll go ahead and give you guys a very quick tidbit or summary in this case of why I'm personally not touching NFTs in this cycle. It's not that I don't see it as an important thing to diversify to. If you guys want some exposure, that's fine. There's nothing wrong with that. But to be fair with you all, my plays are on the long-term time frame. They're on the multi-month to multiple year bets, big bets into certain plays at discounts. And we did the same thing with Uniswap token or the general DeFi space back in November and December of 2020, right before the altcoin cycle kicked off. We were buying Uni at anywhere from around $2.50 to $3 to $4 per token, and now it's riding up towards $30, right? A massive multiple just in a couple of months, less than a year, right? So we want to be able to spot these kind of opportunities when they're at discounts, whether that's buying NFTs directly or that's buying the protocol plays. That's another thing I want to talk about here. A little bit of the skepticism of all the hype around NFTs, because I will say this. We take a look at OpenSea. OpenSea is one of the largest, it is actually today by far the largest NFT platform for buying and selling and listing NFTs. OpenSea has been having phenomenal traction here in the sense of its web ranking. It's come up here by basically being the 970th most visited website when it comes to the global rankings, 407 in the United States alone. And that's a massive set of growth here in the last 90 days. But I'll tell you this, whereas I like to invest on the protocol level, if I'm looking at a variety of other plays out there, for example, ones that we've been interested in or talked about like Rarible, Luxo, a few different plays in the NFT space, to be completely candid, they're not seeing new all-time highs in their global metrics. Now, it doesn't mean the website isn't getting visitors. It doesn't mean in this case that, there's not people still attending the website, but it's nowhere near the euphoria back in May. And that's important to utilize these metrics when we're talking about making investments. This to me signals that there might be a lot of funny noise going on in the NFT space. And trust me, it's a lot easier to get away with than fake volume when it comes to crypto exchanges or altcoins. Because the fundamental setup is so simple, right? Get a couple people with a large amount of ETH, either yourself as the creator or other participants. You go out and create a whole suite of NFTs, and boom, just basically bid the price up in this case. There's no cost to you. You already own the ETH in this case you're bidding in. So now you just own the NFT and the ETH, and then you wait to bid it up at a higher price and get someone to buy it, and boom, it becomes real. You make a lot of money. Whereas someone is left holding this empty creation, right? I would say that, as an example, guys, this is something that is just as susceptible to ruining investors in this case as a speculative ICO would back in 2017. Right? And this is why I always focus and I emphasize to you guys not to fall into FOMO so quick, but rather to see if there's long-term substance. We know that DeFi is here to stay. We know that there's a segment for enterprise blockchain and various other use cases. Can NFTs really sustain themselves? Or are we always going to have these dramatic 98% corrections or massive declines with these major upswings that come out of nowhere? Right? So that's where I have a bit of a hard time grasping. And I'm not badgering NFTs because I do want to talk a little bit about the long-term vision here. Because I think as we start to get other layer 2 solutions coming, and I know, for example, Misego Network, this is a play that we've talked about on the channel, which is popping up big time here over the past couple of days, is launching their new layer 2 solution. There's their layer 2 solution that's just come out or been announced recently by Boba Network. Boba Network is the actual layer 2 solution that they're building under the Misego or OMG Network brand. There's other players out there. There's Polygon, which is a sidechain solution. You've got optimistic rollups. You've got ZK Sync. You've got all kinds of different players, and also other layer 1s like Solana, which I think we have to account for, that are making it much more cost efficient, and hopefully will reduce a lot of that on-chain demand so that we can open up participation to the broader space. I think that's going to be incredibly important. And the reason I'm hitting on this point here is because when we're talking about the NFT space long-term and where they're headed, we need to understand about the topic of the metaverse. And this is a very abstract concept, this idea of the far-reaching world of the metaverse, basically between virtual reality and augmented reality, where we'd have digital collectibles, digital art in our digital homes, digital swords and in-game items and skins or armor pieces that are limited to some quantity that people are willing to pay a price for. And again, I dive deep into this and within the Dash report and do a pretty good analysis of how this market has come to be and where it's heading. And with that, I want to make it very clear, guys, that for now, I'm not looking to per se participate in NFTs. What I'm interested in is the platform play. I'm not really great when it comes to collectibles, nor do I have the insider info to know which NFTs are going to be the best ones to invest in, right? So what I'd rather do is own the token, the platform token, the leading place where these things are being sold. Same exact thing as Uni in this case. Rather than picking a lot of random different altcoins, I want to own the token that's tied to the protocol where everything's happening, right? Just viewing it in purely street smarts, basic, simple logic terms, guys. I'm not an expert when it comes to NFTs. I'll go ahead and say that right off the bat. It's not my specialty. DeFi is and many other areas are. But when it comes to NFTs, I want to take the safe bet that's going to grow with the scale of the market if the NFTs and the metaverse actually work out. In my game plan, I think what's going to happen here is that we're going to see an OpenSea token this year. There's no confirmation of it. I can't guarantee it to you guys, but I think we're going to see it this year sometime. Maybe sometime this year, maybe sometime in 2022. Maybe there's a cool down in the NFT space, another hype wave up. I don't care. I don't want to try to buy into it, right? I want to make sure that when that NFT token comes out or the platform token for OpenSea, I think it's going to be a peak signal for NFTs as a whole. And with that, we're going to see a dramatic decline coming after that token. And whether it's 60, 70, 80% down, when OpenSea finally drops down in that discount range, just like we did with Uni when it came up to around $7 to $9 and went down to $2 or $3 as Bitcoin was already kind of continuing to grow. So in the Bitcoin comparative and ETH comparative, it was declining. I'm going to be swinging in big time and getting that position. That's where I'm going to have my 10, 20% exposure to the NFT space, right? If anything, right? I really personally don't think at this point, guys, with the risks that you don't hear about, you hear about these great stories about so-and-so selling something for X, Y, and Z. The problem is you have to think about the buyer in this case. And if they have the ability to have a liquid resale in this case, right? If I, for example, invest into an altcoin, I'll put it this way, and I think we can kind of close on this topic here because we talked about the broader vision. If you buy an altcoin in this case and you're down 20%, likely chances are that you can go sell, whether you're using an automated market maker like Uniswap or an actual exchange order book, right? You can market or you can sell your position and you can accept your loss in this case, 10, 20%. But with an NFT, you're making a very committed buy in this case, right? When you're buying a whole NFT, a tokenized NFTs or fractional NFTs, perhaps you got a case there. But most people are buying these NFTs whole. And they're at a price range where, again, there's a couple of investors out there, this 100,000 wallets we're seeing, who can come in and buy and spend pretty good chunks of ETH, not only in the sense of gas, but by transmitting ETH for these digital collectibles. And I can tell you guys, at the end of it all, with all these hype cycles, the same goes for the speculative wave of ICOs in 2017, a lot of people will be left holding empty bags, while other people will be able to walk scot-free with a lot of ETH. So I'm always going to be candid and honest with you guys. Again, there's tons of protocols out there that want me to work with them or do work with them on NFTs. I'm not here to just show you guys stuff. I'm not here to drive hype. I'm here to be functionable and reasonable with you guys because there's so much noise out there in this space. And when it comes to these hype trains, I'm not one to per se ride them. I want to make sure to understand them because if there is substance long term, we do want exposure. But for now, simple case in point, guess I did ramble on a little bit. Not touching NFTs for now. Long term though, definitely on the radar with the right setup. All right, guys, that's it for today's video. Thank you all so much for watching. I appreciate you giving me some time today. I hope you guys enjoyed the metrics we dived into. Again, if you like these types of research bits, you guys can always check out the Dash Report. But most importantly, outside of the Dash Report, if you guys could consider liking, subscribing, hitting the bell icon so you don't miss another video, I'd really appreciate it. And leave a comment down below. What are your thoughts on this? Do you agree or disagree with me? You guys can be as brutally honest as you want. Let me know your thoughts. That being said, I hope you guys have a great day wherever you are, and I'll see you all in the next one. Take care, everyone.